Good morning, everybody. Mike Vacchi, Princetontrader here from Mr. Topstep with your Wednesday morning pre-market webcast. Okay, another very strong day and another day in which the bears had the opportunity to push the market down. They had the chance to roll it over. We traded as low as 1475, and the dip buyers came in. And the dip buyers came in because they have absolutely no fear. I mean, in looking at these daily candles, dip buy, dip, 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 holiday, dip. So every day the market trades lower, the dip buyers come in, they have absolutely no fear, they buy it up, and they ride it the rest of the day. And until that dynamic changes, we are not going to see this market pull back. The dip buyers have to be, I use the term in the IM program. They have got to be, knocked out of the pool. You got to throw them out of the pool. If they're going to keep jumping back in, you got to keep throwing them out of the pool. And after you do it a few times, and they just say, "I don't want to get thrown out of the pool anymore," or "I don't want to get stopped out. I'm tired of losing money. Maybe the pullback's real. I'm going to back off and let it happen." That's when the pullback comes. But up on these highs, the Bollinger Bands are pointed to the moon with no end in sight. I think that's a lot of that is a function of this dip buying. I'm not too focused on the Bollinger Bands. What I am focused on is the lack of ticks at highs and the fact that we have not seen the kind of panic buy that you would want to see up on a 1491.5 that would tell you that we're done. So while that may be it, I'm not so sure if it's it or not. I'm short. I'm swing short. I'm prepared. If it's it, that's fine. I continue to add and follow my plan. I have plenty of bullets left. I mean, I'm not, I'm certainly not heavy in the trade, and that's why you start slow and you add slowly. That's on a swing trade on an intermediate term perspective. On a daily perspective, the market's giving you one good day trade a day, 1 to 2 good day trades. Buying that dip. And you keep doing that till it doesn't work anymore. And also the preceding price action is to have a nice little day short there that gets you down into the dip. So there are ways to trade intraday. I always say there's no rule against making money while you're waiting to make money. Okay, I have every confidence that my swing short's going to be just fine. You just have to exercise a little patience and understand that the market is under no circumstances going to operate on your time frame. But while that's happening, there's a lot of things that you can do intraday on the ES or in oil, gold, or whatever else you trade. You're allowed to do two things at once in the market. So from here, the pivots don't really tell us much except for this: the 45-day pivot. When the new pivots came out for today, the 45-day pivot shifted up to 1440.92. Peak price currently is 1491.5. The fact that the peak price spread is in excess of 50 handles immediately after I move it, so basically it's carrying over 50 handles, that is substantial. We made it almost to 60 handles yesterday off the 45 from 1433 up to 1491. So on every metric, we are overbought. But until the bears can switch that dip buy dynamic and turn it around and make the dip buyers into losers, it's not going to change. Economically, we've got absolutely nothing of significance today. The home price index is out at 10. Okay. Anyway, the only thing, we have to wait for jobless claims tomorrow. But there's nothing in the earnings report so far that indicate trouble. But I continue to say if we're going to turn around, it's going to be on something macro. It's not going to be because Google missed earnings or something of that nature. Okay, everybody have a fantastic day. Mike Vacchi, Princeton Trader for Mr. Topstep. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.